All right, hey, what's happening? It's Jamie. It is the 11th of October. It's a Wednesday. I'm getting ready to head out to Miami. I just want to do a quick video about some trading stuff really quick. I actually wanted to talk about something else, and maybe I will later in a second video, but I'm trying to stay on task here. So a lot of folks, when I mean a lot of folks, I mean some of my friends and people in my little circle, and occasionally I get a couple messages that will say like, why do you trade, why do you trade Tesla so much? What is it about Tesla? And that's why whenever I do those trading videos about options and selling covered calls, I always say, hey, fill in the blank, use whatever company you want to, because really it's up to you to decide what company that you want to invest in, or if you're trading, a day trader, or if you're a swing trader, it's up to you, to decide on what company is right for you. So for me, over 5 years of doing some trading, making a lot of mistakes, losing money, making money, I found that Tesla was a really good stock for me because of the company. It could be any company. I just found that company has, some good volatility to trade, to swing trade. And it's kind of like, let's say you're a fisherman, right? And I'm not a fisherman, but if you were, I fished before, but if you were a fisherman and you had a place where a lake or, what do they call it? A fishing hole, right? Like a place where you go, where every time you go there, there's fish biting, right? Like you may not catch fish all the time. You might catch fish more than you don't. And there might be good size fish, right? Whether they're bass or trout or whatever fish you're into. I have a friend of mine named Aaron. He's a big time fisherman. All he ever posts is like him holding up these fish. I have another friend named John who goes out in the sea on a kayak and he catches like giant fish, right? And he's a serious fisherman. So if you're into that and you have a place where you go where you know that the fish are biting, and maybe, I don't know if there's a stream and the weather is usually pretty good, it's accessible, there's always an abundance of fish, it's not overly crowded with other people fishing there. It just seems like a good spot to catch fish. So to me, Tesla is a good spot for me to catch some money, to trade some stocks and options, because it's generally, I don't think it's going to zero, right? But even if it drops heavily, because of all the things it's involved in, and I'm not trying to just be a Tesla. I don't own a Tesla yet, but if I sound like I'm promoting the stock, it's only because it's one of the companies I really take precedence over other ones. I take precedence over other stocks because it's worked out for me so many times. If you're selling a covered call, chances are it is going to pull back. Maybe not pull back to $100 from 200, but it might pull back 1 or 2% at some point, and then you could just cash in and just rinse and repeat. If you are flipping shares, it's going to pop a bit, and then you can find that it will pull back again. So you just try to get out, not be greedy, and just get out when you're making a little bit of profit. If you're doing that with contracts, it's the same thing, whether they're puts or calls. So there's all these different examples that if I listed them all, that you could trade a stock, and sometimes people are just straight up gambling. They have no idea what it's going to do. They're just like, it seems like a good company. I think I'll buy some shares. I'll buy 100 shares, 1,000 shares. And it doesn't do what they want it to do, and they panic and they sell and they take a loss. Now, I've done that. Maybe you've done that. But that's when you're trading. Even if you do your due diligence and you've researched the company and the fundamentals and all the stuff that comes with trading stocks, where you're like, I don't understand why it's going up. I don't understand why it's going down. So there is no guarantees on that. But that's why, to me, I try to play trends and probabilities, and due diligence is like just getting the information. So listen, at our job, and maybe at your job, there's meetings, right? Where there's manager meetings, there's employee meetings, there's emails that go out, group texts. There's all kinds of data and information. We have a monthly meeting for our dealer group for all of our stores where we talk about each store's performance, the brand's performance, whether it's Honda or Jeep or Nissan or Ford or whatever the stores are. We talk about their market share and their performance and customer service index and how we're doing there, and aged inventory and all these different metrics that we use to measure our success and our trends and the probabilities. And if we're off, we got to address it and correct it. We can't wait. If you're in a ship and the captain is off course, you can't ignore it. I mean, you shouldn't ignore it, because ultimately that means he's going to miss the destination. He's going to end up in a different location, and you don't want to do that. So it's not much different when you're trading a stock. I feel like every day I get some data about Tesla that's easy for me to find, and I can identify a lot of the trends on the technical analysis and some of the things that are going on. It doesn't mean it's going to end up that way, but the probabilities are, if I follow these steps and these processes, the chances are I am going to more likely be successful than I am going to fail. And that is what I found, So I'm not, again, trying to convince you to go trade Tesla, because I don't care if you trade Tesla. But if you're here and we're just having a conversation, because, again, people that ask me, hey, what do you think? What do you like? Just like a sports team. What do you think? Who do you think's going to win this Super Bowl, or the playoffs, or whatever sport is? I'm the wrong guy to ask, because I don't follow sports. I hear little tidbits of information, but that would not make me inclined to go gamble and bet in Vegas, or with somebody saying, oh, I heard that the Celtics are doing pretty bad this year. I better throw a bet up there saying that they're going to lose. I have no idea. I don't know what the players' stats are. I don't know what's going on with the team. I don't know any of those matrix of the game, other than what I hear in news reports or just water cooler conversations. And neither should you trade stocks, in my opinion, based on somebody who just is not working. I say Wall Street, like someone who is a professional trader. They don't have to be on Wall Street, but someone who is a professional trader, meaning they do it for a living, day in and day out, and immerse in that, versus some guy who dabbles, right? Some guy who dabbles and messes around, man or woman, that says, hey, I heard my mom's friend who knows a lot about stocks, but he is a I don't know, he's a dentist, right? And one of his clients told him that this stock, this company, XYZ, and I don't know if there's an XYZ, is going to do really, really good in earnings. Some earnings coming up. They got some new product that's going to be great, and now's the time to get in on that. And all of a sudden, you just take your life savings, or you go out and you take your mortgage and you buy stocks or options, or for one direction or the other, and just based on that information. It'd probably be a mistake based on just that, right? It's got to be a little bit more, in my opinion, a little bit more involved, and you got to have more data available to you, confirmed, right? And on and on. There's all these validations of, like, if you hire somebody that works for you, whether you own the company or you're a manager, generally you don't just hire somebody based on, like, wow, they dressed up really well, they have a great smile, they're so nice. No, they're going to ask you specific questions. Like if you're interviewing with me, with my experience that I have, I'm going to have a series of questions that I want to know the answer. I know the answers, but I want to know if you know the answers. I want to know how you respond, and I need to do that to kind of back test if this is the right fit, if this person could be the right fit for that position, whatever role. And that would be with anything. If you're a mechanic and you're just like, I'm a master mechanic, and if I'm a master mechanic and I say, okay, well, if you run into this problem, whatever that problem might be, what do you think it could be? How would you diagnose? How would you diagnose that problem, and how would you solve it? And how many hours would it take to maybe resolve that issue? And there's certain questions that you can ask to back test if the person is really qualified or knows, or at least says it appears to know how to solve the problem, how to get the job done, and it will maybe encourage you in the probabilities of you hiring that person for the job. Just think of the same thing if you're investing in a stock. So if you thought Tesla, or fill in the blank with whatever company you thought was good, is a good company to trade or invest in, trade meaning day trade, swing trade, or invest meaning like I want to buy and hold and put my money somewhere, do some due diligence. Like when I say that, you hear that thrown around a lot, is like check into the company. Look at like what's the company's net annual earnings. What's the company evaluated at? There's all kinds of fancy stuff I don't want to get into, but if you're a layman, right? Like I'm not like I know a little bit more than the average person, but if you're just starting out and you're like, I have this extra $5,000, this extra $10,000, I just don't know what to do. I hear that a lot. Like I had somebody the other day say, I have $7,500, Jamie, what do you think I should do with it? And I said, well, here's some ideas of what you could do with it, but you have to do your own. Don't just do what I tell you, because I'm not a financial advisor, and I'm not worth $1 billion. So I can't guarantee you this will work, but here's some ideas, and then you got to go and research it and find out if it's the right fit for you. You put it into a money market account. Oh, geez. Sorry, I have a Toro guy asking me a question. If you put it into a money market account and it gives you 3 or 4%, then you might say, oh, okay, that's good enough. It's safe there. If you're going to invest into a company, then you might say, okay, let me do some more research into this company before I park my money there. And whether it's just buying shares to flip if it goes up, or if you're doing an option, one way or the other, put or a call. So anyway, that's my thought for Wednesday. If you have any questions, make sure you reach out. I'll talk to you guys next time.